You guys have made it so far with me. Now we are on to the appraisal. So we started with getting pre-qualified. We found an agent and started our home search. We made offers on home. We now understand contract verbiage. We made it through the due diligence period. Now we're on to understanding your appraisal. So once you make it through your due diligence period and you are certain that this is the home for you, you're going to move forward, your agent is going to let your lender know that it is now time for them to order the appraisal. This is if you're financing and you're going to have a mortgage on the home. If you're paying cash, you don't need to worry about doing an appraisal, and it's an extra fee that you don't have to worry about paying for. But if you are taking out any sort of loan or mortgage on the house, you will need to get an appraisal, and this is something that your lender does for you. They will order it. It comes from a third party, a non-biased opinion of the approximate value of the house. Obviously, when you're getting a loan, the lender's only going to loan you money if the asset, the property, the home that you are buying is worth, valued at, appraises at the amount that they are looking to loan you. So let's say you put in an offer on a home and you offer $500,000 for this home. The list price was $500,000, you offer $500,000, the sellers accept your offer and you move forward. Okay, once you get to the appraisal, the appraiser is going to go look at the home by themselves. You do not meet the appraiser there, they just go at some point, they go check out the property, they run a detailed analysis report that they will send back to the lender. Once the lender gets that report, they will share it with you, the buyer. However, there are multiple things that could come out of this appraisal report. There are three options. The first option is, and this is the best option, is that the appraisal comes in over value. So this means, say the house is, again, your contract price is $500,000. Let's say the house appraises at $520,000. This is wonderful news. You did a good job. Your agent did a good job finding a great house that has instant equity. It is a great deal. Good job. Second option could be that the appraisal comes back at value. This means it is appraising at $500,000, which is your contract price. Also, good job. You're paying fair market value for the house and what it's worth. Continue moving forward. The third option, and this is something that happens, it's not fun and it's not the best, but it does happen, is that the appraisal comes in under value. So again, with this $500,000 purchase price house, let's say it appraises at $490,000. We have several options now what we need to do. First option that we could do is look over the detailed appraisal report, and this is something that your agent will do. Sometimes I've seen appraisers where they've missed a bedroom, they've missed the fact that it's a 2 or 3 car garage. So that happens sometimes. So your first thing your agent's gonna do is look over that appraisal, see if there's anything that they missed. That way we can go back to him and be like, hey, you appraised this as a 3-bedroom house when actually it's a 4-bedroom house. And that can help readjust the numbers to get us at the $500,000 appraisal value. The next option to be, say everything's good with the report, we try to dispute it, we try and say to the appraiser, hey, here's our justification as to why we think this home should appraise for more, and they just aren't budging their numbers, they're stuck at their appraisal value. Well, now we have some more negotiating to do. So obviously the bank is not going to lend you any more than what the house appraised at. So again, if we're at that $490,000 number, we're $10,000 short. So we have a couple options. One is that we go to the sellers and say, hey, Mr. Seller, unfortunately, we were willing to pay $500,000 for this house, but it only appraised at $490,000. Can you please drop the price to $490,000 because my bank won't give me any more money? A lot of times when sellers see that appraisal value, they do typically agree to drop the price, again, depending on how big of a jump it is. Maybe what you could do is, another option would be, hey, anything that's in that $10,000 gap that we now have, you are going to have to bring additional out-of-pocket cash closing to the table, in addition to any closing costs that you were already, or additional down payment that you were already planning to make. So let's say the seller says, no, I can't drop it to $490, but I can split it in half and meet you in the middle at $495. What this means is that the purchase price is now $495, but you need to come to the closing table with an additional $5,000 cash to cover that difference. So again, that's $5,000 on top of your closing costs and additional closing down payment that you were already planning to pay. And then the third option is that they say, hey, sorry, we aren't willing to budge at all. Now it's up to you to make a decision. Are you going to come up with $10,000 additional cash to close and move forward with this home? Or at this point, you can back out, cancel, and get your earnest money back, because in Arizona's contracts, we do have an appraisal contingency clause in there. So make sure that when you're writing your offer, unless you're a cash offer, you are not waiving that appraisal contingency, because again, this definitely could come and protect you if the appraisal for some reason falls short. Hope this helps. If you have any questions, let me know. And if you're looking for a home in Arizona, I'd love to help you. Thanks.